Hi, today, after the pandemic, people have understood the need of extra income, and for that reason, people are looking for extra income along with capital appreciation and liquidity. But the conventional products may give you extra income, but they might lag in capital appreciation or liquidity. But there is one product in the market which can give you all, and that is nothing but systematic withdrawal plan in equity mutual funds. Now, let us first understand what is SWP. The long form of SWP is nothing but systematic withdrawal plan, and as shown in figure, it is nothing but parking your money in equity mutual fund scheme and taking a withdrawal into your bank account at a regular intervals. Now, the amount which you can take can be finalized by you, and the interval could be either monthly, quarterly, or yearly. Now, we will just see what are the benefits of SWP over the other conventional products of extra income. For that purpose, we have chosen fixed deposit and property rental income as an extra income source in case of a conventional products. The first point we are going to discuss is the regular income. In fixed deposits, you can get a regular income. In case of property, you can get a regular income in terms of rent, what you will get on your in the property, on your property. And in SWP also, you can take a regular withdrawal from your mutual fund. The second point is about capital appreciation, which is very important. Now, in fixed deposit, there will be no capital appreciation, and hence this is the point which is negative for fixed deposit. In property, based upon your location of the property, if you sell out the property after few years, you could get a capital appreciation. And in SWP, there is a huge amount of capital appreciation in long term if at all you take a withdrawal rate from the SWP which is lesser than the mutual fund interest rate. Normally, it has been observed that in a long term, mutual fund can give you 12 to 16% return, and hence it is very important that you should not take a withdrawal more than 7% from your mutual funds to appreciate your capital. We will also discuss an example at the end of this presentation which will show you how much capital appreciation you can make as compared to SW fixed deposit in case of SWP. Now, the most important factor is the tax efficiency about the various products. In case of fixed deposit, if your annual interest exceeds 40,000, then there is a tax deduction at source of 10%. In case of property, if your rental income exceeds 2.4 lakhs in a year, there is also a 10% tax deduction at source. But in case of SWP, there is no tax deduction at source. Now, let us look at the taxation part or income tax part. In fixed deposit, you will be you'll have to pay the income tax as per your tax slab. In case of property, the same is applicable that you have to pay the tax as per the tax slab. But in case of SWP, you have to pay only 10% income tax for the interest earned, that too above 1 lakh. So, if at all your income in 1 year is below 1 lakh through SWP, there will be no tax for you. So, you can clearly see that in SWP, the taxation is quite less. Now, let us see the next benefit, and that is flexibility oblique liquidity. Now, flexibility of choosing the amount is always possible in fixed deposit. In case of property, you will get a rental income as per your location, and hence it is very important that you cannot choose the amount of rent what you want, and hence this is a negative point for the property. But in case of SWP, it is all as per your choice, and hence there is a flexibility of choosing the amount as per your need. The second point, what we are going to discuss, can we withdraw the amount anytime? In case of fixed deposit, the you can withdraw, but you will not get that much amount of interest. So for fixed deposit, you cannot withdraw it anytime. For property, there is a huge problem that if you sell out your property, if you decide to sell out your property, it's not that will be sold immediately, and hence this point is also a negative for the property. But in case of SWP, you can withdraw the SWP anytime. So this point is favorable for SWP. Now let us compare fixed deposits with SWP. Now consider you have invested 10 lakh rupees for 10 years and you are going to take a yearly income of 6%, which comes 5,000 rupees per month. Now here we are going to discuss bank FD and three different mutual funds. Here we are going to see the considering we are going to consider the date maturity date as 1st of June 2022. Now the total amount which you will receive in 10 years in case of bank FD as well as mutual fund is 6 lakh rupees. There is now TDS. In case of bank FD, the 10% TDS will be cut and hence 60,000 will be deducted at source. But in SWP, there is no TDS. The third point is taxation. In bank FD, it will be taxed as per your tax slab, but in case of mutual funds, you will be charged only 10% above 1 lakh interest, and the end value at the time of maturity in case of bank FD will only be 10 lakh rupees, which is with 6% rate of interest. Now, the fund performance for each and every fund will be different, and hence the end value at the time of maturity will be different. Now, I have already told you that we are going to consider this as the date of maturity to be 1st of June 2022. So before, so you have invested the amount 10 years before and the date of maturity is 1st of June 2022. Now these are the actual figures. We could not disclose the fund name, but These are the actual figures taken for the funds, and the end value of the fund number 1 is 31 lakh rupees, which is giving you almost 16.49% return. The second fund is giving you 23 lakh rupees at the time of maturity, which is nothing but 13.82% return. And the third fund is giving you 20 lakh 43,000, which is 12.34% return. Now, the total approximate amount value will at the time of maturity will be 16 lakh in case of FD. In case of first fund, it will be 37 lakh 42,000. In case of second fund, it would be 29 lakhs. And in case of third fund, it would be 26 lakhs. So, from this slide, it is very clear that the bank FD is not appreciating your capital, and it is also giving you, it is also having much more higher tax or the tax as per your tax slab. So SWP is superior as compared to FD in both the terms, in terms of interest rate or and as well as the taxation. So if at all you want to have an extra income, our advice would be not to put your money in FD but to opt for SWP. Now, we will summarize what we have discussed in this presentation with four different parameters. The first parameter was regular income, and all the assets like FD, property, and SWP can give you the regular income. Then liquidity, bank FD has a good liquidity, property doesn't have a good liquidity, but SWP has definitely a good liquidity. Capital appreciation will not be there in bank FD, property will appreciate, and SWP will definitely appreciate. And next, whether the returns are tax efficient. In case of bank FD, it is not. In case of property, also it is not. But in case of SWP, you will be getting a good tax effective returns. So, my dear friends, from this presentation, we are trying to tell you that if at all you want to have an extra income which can appreciate your capital and which can, and also there is much more lower tax. If you want much more lower tax, then SWP is the best option for the same. I hope with this video we are able to tell you that how you could choose the best product for the extra income. If you like our videos, kindly request you to subscribe our channel and share the link to your friends and family members, and definitely don't forget to hit the bell icon so that you will be getting the notifications as we post the videos on our channel. Thank you very much.